All right, let's get into a real crypto puzzle today. You've got BMR Holdings, one of the biggest buyers of Ethereum out there, but its own experts are sending some seriously mixed signals about where it's headed. So, what's really going on? Let's figure it out.
So you've got this one fund, right? But two totally opposing predictions. It's a head-scratcher. What is the real story for Ethereum here? By the end of this, we're going to unpack BMR's actual strategy and what it might mean for the future of ETH.
Okay, first things first. Let's dive right into these conflicting signals that are causing all the confusion for investors. I mean, it's pretty wild, right? You just don't see this kind of public disagreement coming from inside the same team very often.
So, check this out. In one corner, you've got Sean Frell, their head of digital asset strategy. He's got a pretty bearish case, talking about an ETH target between $1,800 and $2,000 by the first half of 2026. That's a potential drop of, what, 33%? Ouch. But then, in the other corner, you'd have Tom Lee, their head of research. He's way more bullish, saying Bitcoin has not peaked and expects it to climb by January 2026. It's a total bull versus bear showdown, and it's happening inside the same firm.
Okay, so what's behind that cautious, bearish view? To really get it, we've got to look past the headlines and dig into BMR's own numbers, their weekly updates. Because, actions speak way louder than words, especially in this market.
Now, the first thing you see is this monster number. BMR holds over 4 million Ethereum. So yeah, they're still accumulating big time. That alone tells you their long-term conviction is still there. But, and this is a big but, the full story is a little more complicated than just they're buying.
And this is where it gets really interesting. It's not just about if they're buying, but how fast. Take a look at their weekly fundraising. Even with ETH at a lower price, their most recent raise was only $297 million. That's the second lowest they've ever had. You compare that to the bull season average, it's a huge difference. So yeah, they're buying, but the pace is slowed to a crawl.
All right, and here's another big clue that points to some short-term jitters. The premium is shrinking. For a while there, people were paying way over the odds for BMR shares compared to the actual crypto and cash they held. Well, that's changing, and fast. Just look at this. The NAV multiple, which is basically just the share price versus the value of their assets, has tanked. A month ago, it was at 1.3, meaning a 30% premium. Today, it's down to 1.04. That premium has pretty much evaporated, dropping all the way down to just 4%. That is a huge sign that the short-term hype is cooling off. And this cheat sheet of their assets really breaks it down. You can see it's overwhelmingly Ethereum, right? About $12 billion worth. Add in their cash and other small bets, and their total assets per share, the MNAV, comes out to $30.13. The market cap? Well, that works out to $30.77 per share. And that tiny gap between the two? Yep, that's that little 4% premium we were just talking about.
Okay, so on one hand, you have BMR's numbers looking pretty cautious for the short term. But, and this is really important, that is only half the picture. Because while all that's happening, if you zoom out from BMR and look at the broader Ethereum ecosystem, man, it is absolutely on fire. I mean, just look at this wave of institutional adoption. It's happening fast. You've got JP Morgan now accepting ETH as collateral for loans. You've got giants like BlackRock and MasterCard partnering on Ethereum L2s for stablecoin payments. Swift, the backbone of international banking, is integrating with an ETH L2. And then there's Coinbase, which is just going all in, acquiring a clearing co for on-chain prediction markets and launching stock perpetuals on an L2. This isn't just noise. This is a powerful counter-narrative to those short-term fears.
So why does any of this institutional stuff actually matter for the price? Well, it all comes down to what's called the flywheel effect. It's pretty straightforward. First, you get more and more institutions building on and using Ethereum. That means more transactions, which means more gas fees are paid on the network. Now here's the magic part. A portion of every single fee gets burned. Poof, gone forever. This actually reduces the total supply of ETH, and basic economics tells us when supply goes down and demand stays the same or goes up, that creates some serious upward pressure on the price.
So here's the big question, right? How do you square these two things? On one side, BMR's cautious numbers. On the other, this absolute explosion in the ecosystem. Well, it all makes sense when you understand their core long-term strategy.
This is it. This is BMR's entire playbook. Their core strategy is to dilute their own company shares, to sell more stock, for one reason and one reason only, to acquire more Ethereum. They're betting everything on its future utility.
They are playing the long game, believing that what the network will do in the future is way more important than what the price is doing today.
And this quote really says it all, doesn't it? Ethereum one day will end up getting priced to what that utility is being used for. See, BMR isn't making a bet on tomorrow's price or next week's. Their bet is that sooner or later, the market's going to have to price ETH based on all that incredible economic activity that's being built on top of it. So what does this all boil down to? It leaves us with a really fascinating question. As these massive institutions keep building on Ethereum, will that long-term utility thesis, that big grand vision, ultimately win out over the short-term market fears we're seeing right now? That's the whole puzzle, isn't it? Which story is going to be the one that matters in the end?